Hey, ambitious dentist, welcome to Start Your Dental Practice, the show for existing and aspiring dentists to take your dental practice to the highest possible level. I'm your host, Jonathan Van Horn, CPA and ABV, founder of dentistmetrics.com. In every episode, we aim to demystify the how to start a dental practice problem by bringing on world-class dentists, influencers, and consultants in the dental industry to pick their brain about how to get past the barriers involved from going from no practice to being a practice owner to owning your own successful dental practice. Running a dental practice isn't easy. Every day you have thousands of things that you're vying for your attention. And sometimes in our desire to make things happen, we neglect the basics, which is why I'm so excited to have Carrie Straine, the CEO of Straine Consulting, on the show today. So Carrie has helped hundreds of practice owners master the fundamentals and take their practice to the next level. So first, here are a few of the things you're going to hear about today. How a single lunch changed Carrie's career, the largest expense for dental practices today and how to soften the blow, how to calculate supply and demand for your practice and why it matters, why picking the low-hanging fruit is so important for your practice, the importance of finding your number to thrive, not just survive, the patient flow litmus test, what makes a good business owner in general and how to apply to your practice, when to expand your practice to multiple locations, and finally why your balance sheet matters more than your income statement at the end of the day. So stay through to the end and you'll hear about a special offer that Carrie is making available only for listeners of Start Your Dental Practice. So be sure to listen all the way through this entire interview to get access to it. Now here's my interview with Carrie Straine. Hello, ambitious dentists. Today I have with us one of my most respected people in the industry. One of the people that, when I heard his story for the first time, I was like, I've got to connect with this guy. I followed him around quite a bit, and I finally got him to be able to come on today to be able to talk to us a little bit about his story, how he helps dental practices, what he sees going on in the industry, as well as, really how to make the most amount of impact in your dental practices. Today I have with us Carrie Straine from Straine Consulting. So Carrie, if you guys don't know this, no, probably you don't go and search for little tidbits and facts like I do, but Carrie actually was a CPA in another life. He was a guy a lot like me that really enjoyed the helping people out with taxes, and he eventually moved into the dental industry as kind of I guess a financial consultant, if you will, and then he started this amazing consulting company that's been going on for a lot of years right now. So he is the CEO and president of Straine Consulting. It is a fantastic consulting service. I have clients that have used him and have had great results. So Carrie, thank you so much for coming on today.
Oh, it's my pleasure, Jonathan. It's a joy to be on the podcast with you.
So Carrie, I have to know what moved you from being a tax practitioner, CPA, or auditing. I'm not even sure where you were, if you were auditing or tax, but what moved you from the CPA profession into professional consulting for dental practices?
Well, it wasn't intended. I mean, this goes way back to mid-1980s. It was 1986. 30 years ago this month, one of my accounting clients is a gentleman who I'd grown up with. I've actually known this gentleman for 46 years, since we were 14. So I may have a youthful voice, but I'm finally on the back nine in life because I turned 60 this year. So I've got another 60 years to go. But that being said, I always knew I wanted to be in the accounting business and be a CPA like my dad, Harry. He was my idol. So ever since I couldn't remember, age 2 or 3, I just wanted to go to work with Dad. And when I graduated from college in '78, I went into work with Straine CPA Accountancy Corporation. And it was a small CPA firm in Sacramento, California. My dad was actually second generation, his dad before him, and then his brother joined that firm after World War II. So it's a long-standing firm. But after graduating and enjoying the experience of write-up, tax, limited auditing, it was a small-town CPA firm here in Sacramento, although one of the oldest. One of my dear friends graduated from UCLA in 1982. He came back to Sacramento after graduating from dental school, and after associating for a year, he purchased a practice. He called me and said, I guess I need an accounting firm to help me with my books. And back then we posted manually. Talk about automation. We posted, You probably remember that in your history class in accounting, Jonathan. But we actually had journals and we had general ledgers, and it took us all day to get there, but we did. And one day he called me in the summer of 1986. We had both turned 30 that year. And he said, I need some help assessing my practice's performance and how to make it more profitable. And I told him, I said, Ron, his name's Ron. I said, Ron, I don't know how to do that for you. I just prepare your financial statements and tax returns. And we also did his use tax return and his payroll tax returns back then, all that accounting firms did back then. He says, I really want you to take a fresh look at it. So that August, we went to lunch. And I said, so what are your goals? What do you want to have happen? I was just trying to help my dear friend Ronnie. And he says, I need to increase my profitability. I said, why? He goes, well, my gosh, Kerry, someday we're going to be 50. I said, yeah, never. We always thought we'd be 30 forever, and now we're both 60. But that being said, so I said, so you want to increase your profitability, correct? He goes, exactly. So I opened up my file. You can imagine a long ledger-sized file. And I had the June 30th P&L, which I had prepared. And all the expenses, we were cool back then. We had them alphabetized. And so the first one was accounting. And I said, if we're going to increase profitability, you're going to have to cut expenses, but you can't cut that one or my brother Larry's going to kill you. And so he laughed, and we went down through the expenses, and the largest expense category, as it is today for a dentist, was your wages, your labor, what you're paying your team. It's the largest investment, but we tend to cultivate it with so little effort. We just assume people know what they're supposed to do. But what we concluded was there was no way to cut the expenses significantly to make the headway profit from a profitability standpoint. So I had to get into analyzing revenue management and collection management. So I asked him, I said, how do you figure out the work you're going to do on a patient? It's just very innocent. I was just trying to help him. He says, well, I do a comprehensive exam. I said, that's a good start. I said, how do you prioritize the work? Thinking about how we onboarded a client back then. We get the general ledger, the tax return, all the balance sheet schedules, right? I mean, same to this day. And then you can move forward in understanding the goals of your client. Well, in his case, he did a comprehensive exam. And I said, how do you prioritize the work? He goes, oh, that's easy. Emergencies, then soft tissue, then hard tissue issues. And I said, I have no idea what you say, but I believe you. And I said, so help me get my head around this. How many times a year will the average patient come in to see you for an emergency? He chuckled and he said, not very often. I said, why is that? He goes, well, we do a comprehensive exam, then we get him into continuing care. I said, good. Well, I don't major in minor things. I said, so let's move forward. He said, well, the next issue that we prioritize on typically, usually, is our soft tissue issue, the hygiene department. I said, good. How many times a year will the average patient come in to see your hygienist? I just wanted to know what the visit count was. He said, on average, 3 times a year. I said, how's that? He goes, well, a lot of my patients have been with this practice for 25, 35 years. I bought an older practice, and they come every 3 months, 4 months, 6 months, but on average, 3 times a year. I said, good. How many patients do you have, Ron? I was trying to assess the demand. How many, I mean, if I had 500 tax clients, I was going to do 500 returns, right?
Sure. I hope so.
I hope so. Well,
get some angry clients.
Oh man, I'd have been in trouble. They would have been penalized to death, and they'd be calling me, right? So I said to him, how many patients do you have? To which he responded, do you mean active or inactive? And I said, well, Ronnie, how would I know? And he chuckled. He goes, well, I got about 3,000 active. And I said, Ronnie, this is just math. I mean, this isn't geometry. The demand is 9,000 annual appointments. If you've got 3,000 people that are going to come on average 3 times a year, that's the demand, 9,000 appointments. What's your supply? Logical question, right, Jonathan? He says, how do you figure that out? I said, well, how many patients does a hygienist see every day? No, he said 8. And I said, a full-time hygienist works how many days a week? He goes, 4. I said, well, Ronnie, that's 32 appointments a week. And let's assume 50 weeks a year to keep the math simple. That's 1,600 appointments per hygienist.
Hold up your calculator just to check in.
Yeah, I mean, think of the math out there for the listeners. I mean, I'm doing the math. I've got 10,000 appointments, 5,000. He had 9,000 appointments. Each hygienist could manage 1,600 appointments. I said to him, how many hygienists do you have? He goes, I have 1. I said, that's exactly what I said. And I said, Ronnie, who's taking care of the 7,400 appointments that your hygienist can't manage? He goes, what do you mean? I said, Ronnie, 9,000 appointment demand minus 1,600 supply is there's a defect of 7,400 hygiene, unfavorable variance in terms of patient amounts, right? He said, oh my God, I've never looked at it that way. I said, Ron, think about it. Your hygienist is seeing 8 patients a day, 1,600 appointments a year. That's only 533 people when you divide it by 3 visits per patient. Who's seeing the other 2,500 patients of yours? He looked at me and he said, you know what's crazy? I said, I'm afraid to ask. He says, 2,000 of my patients have insurance. I said, and? they get 2 free cleanings a year. I said, Ronnie, remember that junior high school football championship my team won and your team didn't? I said, the same principle applies today. That's low fruit. You can't even give away these appointments. And he looked at me, he goes, you're right. I should at least be doing 4,000 because they're not paying for it. I said, that's right. You can't give it away. And he looked at me and he goes, you're going to help me. And that's how it started. I wanted to help my dear friend who I love as a brother. He's still my client to this day. I started that out in 1986. More dentists came my way because we got focused on the fundamentals, the business basics that support clinical purposes. I was just this morning talking with a client in South Carolina about the mechanics of a huddle. And keep in mind, this practice has 10 locations. And we tend to take our eye off of the fundamentals. I was just in New York with a client that's got 8 locations. And in the first 6 months, they're going to perfect planning and reviewing what they do daily before we expand the horizon to looking at things weekly and then go to monthly. If you don't build on sound principles, just like in accounting, if the general ledger isn't reconciled, how can you even prepare a set of financial statements? So in business, if we don't have the mechanics mastered that support our business, our clinical purpose, you will have a purposeless clinical experience. It started with 1 client, it went to 10 more. Now the next year, my dad retired. His name was Harry. And my brother Larry and I were left with the business. So Dad was 63 and he wanted to go fishing. So he did. And he lived a long life. He died in 2010 at the age of 86. Lovely man. Always wanted to be like my dad. And my mom died a couple years later. Her name was Terry. Harry, Terry, Carrie. And my brother's name is Larry. And he passed away, unfortunately, in 1989.
Oh,
so he died early at the age of 39 unexpectedly. And I was stuck owning an accounting firm I didn't want to own. So I sold it in 1992 to the CPAs on my staff when I had enough business in my dental consulting division to provide for my family and me on a daily, weekly, and monthly basis, just like every business owner has to do. You have to know what your number is. And that's the great thing about what you do in helping startup doctors, young doctors, midterm and late-term doctors assess, what's my number? What do I need to net? And it's more than just netting enough to pay your bills. You've got to fund your debt service, your taxes, your retirement, your income and asset protection products like life insurance, disability, long-term care, your working capital reserves, because, even the education for your kids, because someday you may not have enough. And if you don't plan to have if you don't have a plan in place where you're basically planning to fail. If you fail to plan, you're planning to fail. And I'm telling you, I learned early on at age 33 when Larry passed away, June 27, 1989, that all of a sudden I was stuck with a liability to my mom and dad, a liability to my sister-in-law, and I had to come to terms with just making sure the economics worked there. And I just put my head down and went to work. And I kept working and kept serving and focusing on the needs and the wants of others. So for me, when we work with a client and how it's grown, we just find out what do they want. And it's critical to meet with advisors like yourself, investment advisors, to really get a global perspective of what the true net that is required of a business owner in order to thrive, not just survive in this workplace. And that's how it started. And since then, we've worked with over 6,000 practices. My team and I have conducted over 22,000 free telephone consultations with doctors throughout the United States and Canada over the last 30 years. We currently have an active client pool of approximately 400 clients, ranging from startup doctors. I was on the phone with yesterday, a new pediatric dentist starting up with us down in Arizona. 2 nights ago, I was in Atlanta with an oral surgery group at a board meeting. Coming up in October, another specialty group meeting then in September as well. And on top of that, I lecture virtually every week somewhere in the country. So that's a little bit about what we do, but I'm very much supported by a team of over 20 professionals that are committed to helping owners' dreams come true.
Very, very good. Love that story. I love the focus and love the forward-looking aspect of it. And it's very interesting. So you talked about you've got to build on sound principles and you've got to get the mechanics down. You got to get it's the fundamentals, right? It's just like,
right.
Like in business and in life and, in sports, it's all about the fundamentals, right? You got to start somewhere before you can get better. Back whenever you were starting, did you see people lacking the same fundamentals that you see today?
Yes. As a matter of fact, the consequences of their efforts reflect the flaw in their planning. I see doctors working so hard, and again, during the course of the year, we'll do 1,200 to 1,500 complimentary or free consultations. And we use a tool called a Straine survey. And the Straine survey asks this information, Jonathan: how many patients of record do you have? And somebody goes, well, what's a patient of record? Well, we've defaulted to what the transition industry has defined as an active patient. It's the number of people you've seen in the last 24 months who you have not taken out of your patient base. Mm-hmm. Okay, so that's your denominator, number of patients. Then I look at it's called my patient flow litmus test. I look at that, then I compare it to the number of patients you can see in your continuing care program right now, based on how many hygiene appointments you have a week and what percentage of those patients that are going to be seen need to be in a 3-month continuing care versus a 6-month prophy state. Now, there's a problem there, because in the 22,000 plus patients that our practices we've looked at, fewer than, on average, 3.5% to 4% of the patients are being treated as if they have periodontal disease. Although the American Academy of Periodontology and everybody else who has attended the seminar says, I know there's a lot of periodontal disease out there, it really comes back to the principles the doctor's following in their operating policies that's creating that output. But I want to see, if I've got, let's take for an example, the practice has 2,000 patients. And let's say that doctor's got one hygienist. Mm-hmm. And let's say he or she sees 32 patients a week. And I always, in my math, I apply a 24-week cycle for continuing care because of vacations and holidays. Well, I know that if that guy with 2,000 patients got one hygienist seeing 32 patients a week, that's 768 appointments in the next 6 months. And if he tells me that 5% of those are going to be coming a second time, and it is what it is. Whatever they want to have it be. I'm not here to have an opinion on someone's clinical philosophy. I'm not a clinician. But if it was 5%, I would divide the 768 by 1.05, Jonathan, mm-hmm. because 100% of the people come once and 5% a second time. And that would conclude that he's only got room for 731 people. It's just math, right? So, I mean, if you had 768 appointments in 6 months and everybody came twice, that'd be 384, right? I mean, it's just the number of people. You got to get down to people count. Or as we say, body count, right? Don't want to sound like a mortician, but it's body count. So once I know if he's got 2,000 demand and he's only got room for 731, the last question is how many people are scheduled in hygiene? Mm-hmm. And typically what we see, it's about 80% of the 731, or around 600 people. Now, my statistics are only based on 22,000 different sets of analysis, but I bet you nickel, I have the largest database of objective information on the planet. So then we have to come back and ask the doctor, what do you think about that? You're seeing 731 patients, you're producing 700 grand, roughly. I mean, you think about the revenues your clients are earning from a one doctor, one hygienist model. If you want to double your revenue, double the patients in the practice. Mm-hmm. So then I have to teach them about the profitability formula. Annual visits times revenue per visit equals production, times collection rate is collections, minus overhead's profit. And if that number isn't enough to fund your lifestyle, your college debt, your practice loan, your taxes, your retirement, your life insurance, disability, long-term care, the kids' education, et cetera, then you haven't planned accurately. And that's why we need to work together. You and I can help a lot of people make their dreams come true. Because the biggest problem is when they get to those tax dates, and we got one coming up on September 15th, don't we?
We do. It's going to be the S-Corps and the partnerships.
Yeah, so we've got to be on top of those returns, those quarterly estimates. I mean, your clients that are S-Corps have a lot of quarterly estimates they're paying on top of withholding out of their W-2s. I understand that, which, as my CPA says, it still keeps me a little bit dangerous, but I can certainly identify the problems before they come up. So the complementary strain practice analysis can meet with any doctor who wants to take a look at their patient flow. Then we look at production and collections, and we look at reappointment rates, and we look at unused operatories. And in an hour, I can come up with a set of recommendations for them to capitalize on that I have found will move the needle by 19% if they'll just do what I tell them to do. That's even without being my client. If they're going to be our client, we're going to double it. But that's a story for someone to find out about in a
So tell me about this. So again, it's a hypothetical, but we have clients that fall into those math categories that you just classified, and there's all this. I don't know if it's mind stuff or if it's just habits that they've created over time, but a lot of people say we don't have enough room for more space. At that point, what do you do?
Well, I would start at the very design. I think that we use a principle called the 2-2-2 principle at the very minimum. We need 4 operatories with 2 hygienists, 2 assistants, and 2 administrators.
Mm-hmm.
And today, and you're in Arkansas, right?
Yes.
And I have clients within 5 miles of you.
Mm-hmm.
Right? And we have clients active in 46 states and several provinces. I think a dentist today should plan on a minimum of 5 treatment rooms. If I was setting up my business and I was going to be a sole practitioner, I'd have 6. I'd have 3 for hygiene, 2 for me, and I'd have 1 for my E4D, my crown making machine, and that last 6th operatory with my assistant who can make and get those seated. So that's how I build my model. And I know what your listeners are thinking. My God, I can barely keep up with the exams on 1 hygienist. How do I manage the exams on 3? Number 1, you've got to have a proper treatment planning protocol so every patient doesn't need an exam, because your 4341 and your 4910 patients don't need exams every visit. Your 4341 and 4342, which is your scaling and root planning, they don't need exams. And if you're in a state where your hygienist can give anesthesia, you don't even need to numb them up. Then when they come back every 90 days at every other appointment, they don't need an exam. They just need a semi-annual exam. So when you look at a practice that has around 25-30% of the patients in perio, Jonathan, that practice should only be generating about 4 exams a day per hygienist if the doctor's done their job. That's number 1. That practice, if all I had was 2 hygienists and me in Arkansas, in California, Colorado, South Dakota, Washington, I can tell you all the states, the minimum level of productivity would be about $1.2 million to $1.3 million a year just with a bread and butter practice. And I know that blows the mind of people, but when you learn how to speak the language that I'm communicating to you and your listeners right now, and you learn to think effectively and efficiently using systems to guide people to implement your policies, we're going to have breakthrough results.
You say that. I have a lot of people that have asked me in the past, what do you feel like makes a really good business owner, not even just dentist? And when I look back at the most successful people, it is typically someone who is not afraid to lead their team in a certain direction. And the ones that have the most success also have those processes in place that have been created over time. So, as far as leading practices, how do you work with people to be able to make sure that they can actually, hold people accountable, set expectations, and, all the things that are required of business owners?
Well, it really starts with the mission of the owner, the why behind what you do. How do you want to serve? Who do you want to serve? Who do you want to love? What's really your ethos? We call it a culture of yes. You is the why. E is the ethos, your love for people. And the S are the systems you're going to follow. There's a system for hiring. There's a system for communicating. There's a system for leading. There's a system for monitoring. There's a system for redirecting people. There's a system for creating office operating policies. There's a system for approving payables. There's a system for posting the general ledger. We've got to understand these business basics that support our clinical purpose. That's number 1 is your mission. Number 2, then we move into the vision. So I have to assess what is the vision. And the vision, Jonathan, starts with the owner. When do you want to retire? How much money do you need to live on? How much you need to save? All those economics we talked about a minute ago, right? And how much time do you want to give your business? So I look at it this way. Most dentists work about 30, 32 hours a week clinically, and God bless them. That's a lot of hard work. But they can't ignore the fact that they need to put in another 8 to 10 hours administratively on their business. You've got to work on your business as much as you work in it. Not as much, but an amount of effort necessary to make sure we're clearly defining the path that our vision says we're going to be on. So when we establish a vision, we're going to start with goals for the owner personally, then set revenue, collection, and overhead goals for the practice. So you don't start there. You start with the net, right? That's the number. You start with the net. And my startup doctors, they need to be liquid and profitable and solvent in the first month. And those three words all have different meanings, right?
Mm-hmm.
Okay, you can be liquid and be virtually be moving into insolvency just because you have a savings account. But you're going to be driving your overhead's going to be burning capital faster than you've ever dreamed of unless you have a plan to get new patient flow, watch the treatment planning, the acceptance, and make sure we're getting the production and collections in place. And with our startup doctors, if we're not producing and collecting at least 50K in the first month, we're going backwards. And I think I have the record for growing the fastest startup practice. It was up in Eastern Pennsylvania. He asked me how long it would take for me to get him to 5 million. I said 5 years. He did it in 3.
Wow.
Yeah, and that was in one location. So how big is your dream? First step, mission. Second step, vision. Once I know the overall production goal, then I've got to break it down into how many new patients do I need? What's my reappointment rate? How many hygienists will I need? What will their daily goal be? What will your daily goal be, doctor? Or hourly? I'm not attached to daily or hourly. We can look at it either way. How many hours will you work a year? You got to put in the time to get the dimes. So that's going to drive the revenue. What's the case acceptance percentage? If I have a doctor who says I'm watching everything or I'm being conservative, well, to me, conservative isn't watching. Conservative is telling the patient everything they see. As a matter of fact, when a patient goes through a comprehensive oral evaluation, there's 4 things the practice has got to make sure they have documented. A complete set of films, a complete charting of missing teeth, a complete charting of existing restorations, and a full perio charting. Doctors are missing it there. I've looked at over 1 million perio charts, and I can tell you the data's not there. That's number 1. And to be a patient of record, it's somebody who's gone through a comprehensive exam and been given a comprehensive treatment plan. I'm not going to hide the story from you, Jonathan. I'm going to tell you what your problems are. Now, you can accept on your terms. Does that make sense?
Mm-hmm.
You might say, I've got to accept subject to my insurance funding it, because if economically that's where I'm at, great, we'll help you out. You may say, here's my credit card. I live in West Little Rock. I got the money. I'm willing to say now, right? And that may be. Everybody's got a different priority. They might have inherited whatever, but the doctor's got to tell them comprehensively everything. So we set, associated with the vision, are goals. The goals are the very first step of creating a strategy. Strategy's first step is goals. So mission, vision, strategy. Now, whatever those strategies are, we then have to break down and define the step-by-step approach, which are housed within operating policies. There's 10 for our clinical. New patient policy, radiographic policy, continuing care policy, problem-focused patient policy. Those move every patient through an exam. Then we've got to get to the, inform before you perform. We better have a financial policy, right? So we're not financing all this production. Then, of course, once the patient's accepted the treatment plan and agreed to pay it, you have a scheduling policy. Then we have a confirmation policy. Well, then we better have a late patient policy. We're dealing with humans, not machines. Then we have a missed appointment policy, and then we better have a reactivation policy. And these are the policies that index into job descriptions so people know exactly how to do the job as if they're the owner, because it reflects what needs to be done to accomplish the vision and with the love of the mission. Now, once I've got all that done, I'm ready to hire somebody, right? That's why we take 6 months of working with a new doctor who's buying a practice or owning one before they start taking over the reins of that operations to prepare them for practice ownership, working with all of their advisors. It takes that much time. Now the management system kicks in. See, the management system says, now I've got this vision and policies in place. I'm now ready to hire people. And you got to think about who you want to hire. We want to hire optimists. We want to hire people that are extroverted. We're in the people business. We want to hire people that are low in neuroticism. They've got to get through a lot of data quick every day. All right. They've got to love your mission. So pay attention during the interview phase. Once we hire them, we got to take them through training. And that's part of your system. Training, that's the management process within the management system. There's the first part's the management structure, org chart, policies, mission statement, employee handbook, all the things that prepare you to then hire people, move them through the process of bringing a team member on and growing them, training, huddles, staff meetings, end of month review sessions, semi or annual performance review sessions. There's a whole set of activities that allow people to see how they did and to see how to apply what they've learned. And then the last component are the management feedback tools, which can be anything from a day sheet to a balance sheet, right?
Mm-hmm.
You know, and if you've prepared 1 million balance sheets, and so have I. I'm far more interested in the balance sheet than I am the income statement. I mean, I know that the income statement is just basically a reflection of the difference in the balance sheet from the beginning to the end of the period, ultimately, when you think about the science of it. But if you don't understand that and haven't made the adjusting journal entries, how would you know? And I don't want to waste the time. My clients don't have the time to go get a 4-year degree in accounting and have been exposed to the thousands of hours you and I've been exposed to. So that's why they need us on their extended leadership team. So whether they're the startup practice, or we've had the pleasure of consulting with the world's largest dental MSOs today, and we have a lot of MSOs and that work with us. We have a lot of private equity firms that talk with us, and I have a meeting coming up in an hour with a large law firm that does a lot of MSO work on a project. So whether it's a startup or multiple locations wanting to go to a capital event and go from there, we have the expertise in our organization to help anybody build the plan they dream. So that's a bit of an overview.
That's great. So as far as that single doc practice, the guy that's out there that's trying to maybe has some aspirations of in the next 10, 15 years to own a business, but not have to be working every day. And you're obviously, if you own a business, you're going to be working every day, but has aspirations of not being in the chair, having associates that work for him, maybe having multiple locations.
Right.
How do you move from that first location to the second one? Because that seems to be a very big hurdle for people to be able to get over in their minds.
Sure. Here's the checklist on determining whether or not you should go to a second location. You ready? Number one, I'm meeting my personal financial goals from practice location number one. If you're not, then you're going to be extremely stressed out and not think accurately as we look to location number two. So, when we look at a sole location, pretty much for us, baseline is at least getting them to $1.2 million to $1.4 million. They've demonstrated they have some ways of thinking that are creating profitability that they can impart to others. And the overhead should be at about 50% of that. So then you're looking at a income before personal compensation and taxes, depreciation, amortization of around $500,000 to $600,000. And as you know, then we've got debt service, we've got taxes, we've got retirement. And if that owner is living on much more of that $600,000 than say $120,000, $125,000 a year, they're never gonna have enough working capital saved. Mm-hmm. You've got to tie the personal budget into realistic expectations for today and tomorrow, and not declare victory too soon and start buying the jets and all this stuff. You're crazy if you do. So the first thing we do is make sure that A, we're making enough money, and B, we have a clear understanding of the process of creating a mission statement, a vision statement, set the strategies, the policies, and the management systems. And I have developed 3 department leaders. We call them department facilitators, because truly in a sole practitioner model, the manager is the owner. Too often they give away that title because they don't want to be the person who has to, quote unquote, confront people or hold them accountable. And, you got to get clear on that process, because if you don't know how to do that in the farm league of one practice, you'll never get in the major leagues of 3 to 5 to 7, right?
Oh yeah, absolutely.
So we've got to master those things and really be prepared to go to the second level. Then we've got to determine for second level, how are we going to finance it? We can get 100% financing, and that's good, but we got to have a way to pay it off. At the second level, we probably don't need a management group over both locations. We probably don't need to set up a separate entity as our DSO owning all the assets with a professional corporation owning the patient chart and the receivables yet. That's going to happen if you ever want to bring in private equity or third-party non-clinician investment capital in, because you'll need to do that based on the dental practice acts of the state you're working in. But early on, we can get to 5 to 10 practices with an owner owning each practice, the owner owning all 10 locations, could be 15, but they're going to start with 3 department leaders, that one for hygiene, one for assistants, one for administrator. And typically you're going to find yourself relying on a key administrator who's learned from you, that has available time to then oversee location 2 with you. And as you go acquire location 2, whether it's a de novo or an acquisition, you know it's going to fit for you. And it's got to be at least 5 miles away from location 1. Otherwise, you're going to have problems supporting the logic of the covenant not to compete, whether that's lawful or not in your state. You've got to be careful when you buy locations that you don't buy one too close to one another, or if you do need to liquidate one down the road, the buyer will not want to pay the market value if he thinks or she thinks that the patients could migrate back to the original practice. So we have some
across the street.
Exactly. And we see it all the time. I was on a conversation last night with a client in the western part of the United States about that. And I said, as long as you're willing, you can buy both practices that are within a mile of one another, as long as you know when you sell them, you'll be selling both practices at the same time to the same buyer. So you're limiting your acquisition candidate pool. But that being said, I think when we go to location 2, that administrator can help you. And then getting to location 3 and 4, at some point in time when we can't keep up, one of your department leaders is going to ascend into a supervisory role along with that administrator to oversee maybe the hygiene department. And we start to build middle management. Senior management at this time is the practice owner, you, and me, Jonathan.
Mm-hmm.
And you cannot microwave the knowledge that I've learned in the 42 years since I started college. 42 years ago, this month, I started college. And there's no weekend course that you're going to be able to glean enough information to run this picture accurately. And if you think you are, good luck. I'll meet you down the road. So the same when it comes to you. Numbers don't lie, people do. And that's one of my quotes. And another one is, you can have your own opinion, but you can't have your own facts. So that's how we go from 1 location to 2. And the other thing you've got to be able to give me is time. And I can tell you my clients that have grown 6 to 8 to 10 locations, that have grown the practice value from 10 million to 40 to 60 to 80 to 100 million because they've been attractive acquisitions for larger MSOs. Those are the clients I typically talk to at 7 a.m. on Sunday morning, 7 a.m. on Saturday morning, or I do a lot of my planning for the week with my larger practices beginning at around 4 p.m. Pacific time on Sunday as I sit in my den with a cup of coffee or a glass of water, and I'm usually on the phone for 4 or 5 hours. As a matter of fact, last Monday morning, one of my clients missed a phone call at 5 p.m. Pacific, and I got a text from him at 2:30 a.m. Pacific. He was at LaGuardia in New York. He said, I'm so sorry, and I heard the text go off. I texted him back. I said, when's your plane taking off? He goes, in an hour and a half. I'm sitting at the airport, and at 2:40, since I was awake, I heard the text. At 5:40, we had an hour on the phone. So, I mean, I love what I do. I love who I serve. I want to be a person of value in their lives, and someday at my funeral, they'll talk about me, but we're not planning the funeral yet.
It sounds a lot like what kind of drove me into being a specialist was that, being a tax person is fantastic. I love, saving people money on taxes, but really being able to make a difference in the business of your clients is so much more rewarding than just shooting out a P&L every quarter or every year for some practitioners. And so, that you can tell in your voice, you've got this mastered. It sounds like it almost sounds like I'm reading from a Fortune 500 management book tutorial of how to run a dental practice here. So this has been a fantastic interview. You've been a wealth of information. If anybody has any questions about what's happened today, what's a good way for them to be able to get in contact with you?
Well, the best way is, I'll give you a couple of ways to contact me. Anybody can call me or text me on my mobile. How about this?
Sure.
916. That's area code 916-765-7200. Now, there's significance in that 7200. I need to tell you.
Okay.
My hobby should be reflected in that number. And I love to play golf, and par is usually 72. So 916-765-7200. As a matter of fact, a lot of our clients in the month of January and February, when I'm not traveling, come all the way out to where I have a home on the West Coast. They come out to the Monterey Peninsula, and we do a lot of planning retreats for our group practices, and we sneak in a little golf. So if anybody has an interest, give me a call, number one. Number two, if you want to set up an hour teleconference time, get a hold of Stephanie Gonzalez, and her email is Stephanie, Stephanie, at Straine, and Strain has an E on the end, STRAINE.com. Stephanie will receive your email. She'll call you, set up a teleconference time. If you'd like to send in some data, cool. We'll use our Strain survey. If you'd like just to have a call and have me access your software, I understand all the major softwares pretty well, and I can access the reports that will tell me what you've got. But more importantly, when we have that call, I want to know what you want. Because once I understand what you want and I see what you've got, I believe I can give you the best recommendation to help you explore and adopt strategy so you end up getting what you want instead of what you got.
Very cool. All right. Well, I really appreciate your time again. I urge everyone listening to reach out to Kerry and just, even if it's just to shoot him a text to say thank you for coming on and giving us, 45 minutes to an hour of his time. Obviously, he's a busy guy, and he is a good golfer. If I were to be golfing, I would be 7,200, but I would still have the zeros on there. And also, he obviously really cares about this industry. So, guys, reach out to Kerry. He's one of the good guys. And Kerry, again, thank you so much for coming on.
Jonathan, my pleasure. I look forward to chatting with you and all your listeners in the near future.
Yes, sir.
Bye-bye now.
A special thanks to Carrie Strain for sticking around longer and providing some really, really incredible insight into him, his life, and his consulting business. So as Carrie mentioned, you must master the basics to really move the needle at all in your dental practice. So I hope you found this interview valuable. So to get today's bonus, a complimentary 1-hour consultation and discovery tools through the Strain Dental Practice Analysis, simply text PRACTICE to 33444. Again, that's PRACTICE to 33444, or visit startyourdentalpractice.com/bonus if you're outside of the U.S. or on a desktop. You'll also receive updates on the latest episodes of Start Your Dental Practice, helpful tips for owning and running a practice, and promotional opportunities direct to your inbox. So that's it for today's episode, but that doesn't mean that the learning and implementation have to stop there. I've created a free report called The 15 Numbers That Will Make or Break Your Dental Practice. This report has been downloaded over 1,000 times by dental professionals. So if you want your free copy of this report that's going to outline what the most important numbers are in any dental practice, and it also includes how to look at your numbers, how to set goals, has a whole slew of really important information that is the culmination of all of my experience as a dental CPA, then just go to startyourdentalpractice.com/free gift. That is startyourdentalpractice.com/free gift. And so that's it for today, Ambitious Dentist. Again, I'm Jonathan Van Horn, CPA and ABV. I'll see you next week with another world-class practice owner or consultant that will help you start your very own dental practice. Thank you guys so much for being a part of the Start Your Dental Practice community. If you enjoyed today's episode, please do me a favor and go to startyourdentalpractice.com/iTunes to leave your honest feedback and review on iTunes. It's going to help me create a better experience, a better show, a better podcast for you, the ambitious dentist. Your feedback really does help, regardless if you like the show today or not. If you didn't like the show, let me know, because it's going to help me create a better show and podcast for you. Lastly, if you know of anybody that would benefit from today's episode and today's content, today's guest, please feel free to share with them on social media or through email.